All right, hey there traders, back with another video to introduce to you the latest addition to our Orderflow tool suite, and these are the Orderflow Delta candles. Now I have them applied here both to a 1-minute chart on the ES. I'm just using Friday, right, with a one minute chart. There's plenty of Delta events to focus on. And I'm going to focus in here on this section here around 11:30, and we'll look at this applied both to a footprint chart as well as just a traditional candlestick chart. So let's start on the footprint chart because I think it's just easier to understand and interpret. So let me pop this open here, and we'll go back to the candlestick chart in a sec. So this is a particularly good example here of where this can be really useful. So let me scrunch down a little bit. So you can see we've broken the initial balance here. We stay in this range a little bit. And then we get the break here. And at that moment in time, that's the low of the day. So it's a break of structure. Down we go. We push down. We hit a little support here sideways. And then there's another drive down. And you can see there's a very big effort here. This is a huge candle. Maybe increase in volume. Very negative delta. And we push down here. But as we hit that low, all of a sudden, whoa, things start to turn around. So first question is, well, why would you even be looking here? Well, in the first place, if you look off to the right here, I can see this. This is our auto fibs indicator. There's a golden zone here. So in matter of fact here, let me show it to you on a 5-minute. So this is that pivot low right here. So we're using the pivot here to the swing high, and we come right back into that golden zone. It actually ends up being the low of the day. But that's why you'd be looking here, like, oh, okay, well, perhaps an algo is going to kick in here, and let's go take a look. This is a 5-minute chart. Let's go down to our 1-minute and look on the footprint chart. That's why you'd be looking there in the first place. So here we come. There's that 65. We drop hard into it. Now, a couple of things happen. Number on the candlestick, you'll note here that there's some delta events. There's delta divergence on the footprint chart, meaning I've got a new low by 1 tick, but I get an up candle, right? So that's how we tally the divergence within the footprint indicator. Now down below, we do it slightly different here, which these little dots, we'll get to that in a second. Let's just focus in on the idea here of how this can be useful to read. So with the big push down here, you'll see that we've got these bright colors here, and the idea is to draw your attention to it. So as we push down here, then the delta on this candle is negative 1265, and the extreme of the delta is minus 1306. So we're closing very close to the extreme negative delta, and that's why we get a brighter color here. There are only 4 colors in the Orderflow Delta candles. The sky blue, the magenta, and then just a green red. Whenever we have the extreme colors, same thing in the summary table. When we have the magenta or the sky blue, that means that we're at an extreme of the delta. So here you see the delta is 798. The max of the delta was 812. So we're closing very close to that max, thus the blue. Right, and then you see immediately this is that one candle, and then the push starts here. Two very extreme deltas here, and it's just reflected visually. You see, it's not that you're not getting this information. In fact, we give you delta bars within the footprint chart. Right, you've got these, and you've got delta on the footprint, above, below. There's all sorts of different ways that you can read the delta. We did it this way simply because, remember, we're traders too, right? So we just find this is easier to read it. It's particularly on something like a 1-minute or a 4 range, 5 range, something very tight where you got to make very quick decisions. It's not that you can't come to the same conclusion here. This is just easier to read. We think, right? I mean, that was the point behind it. Oh, let's turn these off. It's visual. Now, let me compare this to something that many are familiar with, and that's the cumulative delta. Now, there's a difference between the two in the way that they're tallied. Here, every candle, the delta is unique to this candle, as in it has no relationship to the prior candle. Each candle starts at 0. So I get a true reflection of what the delta was in that candle. Unlike the cumulative delta, where because it's cumulative, the prior candle's close is where the next candle opens, because there's a relationship between the two. So you're not getting a true visual representation of the delta of that candle because it's tied to the previous candle. Here, because it resets to 0 at each candle, at each minute in this case, I get a true representation of what the delta was within that candle. So again, we think this just makes it easier for a trader to read this when you've got to make quick decisions based on what you're seeing here, rather than, okay, I can get in this table and yeah, I can see, oh, there's a min and where was the max, and here, boom, I can see it. Just again, it's not like you can't trade without it. It's just that we think it makes it easier to make those quick decisions. So as we see this kind of carry on here, you'll note here now we start to see divergences again. And the point of it is not, oh my God, divergence, jump in at the market, but hey, why would I be seeing divergence? If we're going to push up higher here, and you might have thought, oh, okay, well here, push those sideways, we're going back into the initial balance, end of the day, we're going to rally towards VWAP. Well, we run into this imbalance here. We've got a fair value gap here between the low of this candle and the high of this candle here. So that's what's extended over here. So we can see the imbalance here. Well, what do? Right into the imbalance area here. There's a push to get through. Huge amount of size. Look at the difference in volume here. These are all 2,000, 22, 24, right about 2,500, 16,000. Something huge hit the market here. And note, it's on top of very positive delta, yet I got a down close. All right, so that would be telling that's not what you'd anticipate. Perhaps you've got, passive orders are being triggered here. There's a lot of reasons for it, but at the end of the day, wait a minute. This is not what I'm anticipating to see here. If we're going to rally back hard into the initial balance or towards VWAP, we don't get it, and then we go a little bit of sideways here. Now look at the drop here. We go from 20 in the volume to 16,000 to 35, 20. Now we're back in this range of where we've been. Volume is still kind of heavy here. We're still middle of the day, right? We're in the noon hour, so it's kind of surprising to see this right at noon, but there it is, right at that imbalance. You see, right, again, there's information above the candles. But again, we just think it's easier to read. Now, let's do the same thing. Let's go look at it over on just a traditional candlestick chart. Okay, same section, exact same section. All right, so here we've come down. Here's the 65. There's another golden zone below it, right here. So we're in an area where you might be looking, okay, maybe I get some support here. And you see the same thing here. Now, now I have below here, it wouldn't matter. Well, you had something for momentum. I just happen to be using a TDI because I like it. And then I've got a volume zigzag here. So I can see that I'm looking for divergences in the volume, which we'll spot over here. But as we come into that low, okay, well there it is represented again. It's the same thing we just looked at in the footprint. But I'm not getting the bid-ask intra-candle, but I can see that there was extreme negative delta followed by a big upswing in delta. Now, it's not at the extreme, but that is a delta flip. Momentum starts to turn. This means I've gone 2 times the ATR to get this to flip from red to green. So something's happening here. Then I get the change of character. And we rally right up here. Now it looks a little bit differently here. And well, you could, it's there, right? It's still there, right? You can see here's the fair value gap right here on this chart. I just happen to, this is from our volume profile, so I know those are low volume nodes. So we're coming into an area which would make sense why we have the imbalance here. Not a lot of business has been done here, low volume node. So we get this event here right, there's a golden zone, so it's very close to a 50 from the high. So there's reasons to be looking here. We looked at in the footprint, we've got an imbalance there, and we've got a fair value gap. I've got the same thing over here. I just don't have it marked, and if we went down, come here, if we went something like this, right, you're right in the pocket here where you might be between the 50 and the golden zone. You're looking for that to come back down. So there's lots of reasons to be looking here. Well, if this is going to keep rocketing higher, whoa, that's why am I getting this big negative? You can see it, right? If you're a price action trader, that wick rejection is telling. Now, add to it that I had the big effort here of aggressive buyers getting rejected. Well, at very least, if you were long, that might be a note of caution. And everyone's going to handle that differently. But if you were long, that is not what you would want to see, right? Just this aside, just that wick rejection would not be what you'd want to see. And then as we come down here, note again, this is another example here where this is useful. Now, everybody on the planet that's trading knows, where's my arrow, knows that underneath that pivot, there's going to be a lot of liquidity. Right? It's the low of the day. So the fact that here they can't get there is, again, telling, right? you're kidding. We can't get another 1.5 lower to get a new low. You know there's an effort made to get there. So if we look here, right, here's the big down candle, right? Very aggressive selling. Wait a second. Why am I getting divergence here? And then I've got two candles here where they are, I get my crosshairs on this. Well, that'll work. If I've got negative delta coming in this, why am I getting such a big up close? In fact, I've got divergence here. The reason that candle is orange, that's part of our graphical order flow. I've got less volume. Well, here, let me take that off. I've got in this swing, there's more volume than there is in this swing. So thus volume divergence. Now look at the momentum, right? We in fact we get a little shark fin. We get outside of the Bollingers below the 32. And I mean I can't script them any better. And then here I've got negative delta. Traders are pushing to try and get to that low, thus the negative delta. Yet I'm getting up close candles, thus the divergence. So again, if you were pushing for the break of the lows, thinking you're going to grab that liquidity and the market's going to keep selling off, when we come back and then change of character, likely any sellers here that were involved in this big push lower are now uncomfortable, if not covering. And it just carries on. There's another push for the low of the day. Here they can't get it. There's the session low. They can't get that low. Interesting, right? They can't get it. Here's here's the last push. Just like this was a push down here, the big negative push. The big effort to try and get to the lows drives the RSI back down. Another shark fin. I got more divergence here. Look at the delta that follows right after this divergence. A little bit. Okay, what are we doing? Boom. Big push up. We get out, another shark fin. We get outside, and then wait a second. All of a sudden, then I got divergence here. So wait a minute. Where's all the follow through? Rolls over, and now note here, right? Because it's magenta. I know that in these candles we're closing at the extreme of the negative delta. And then I go extreme of positive delta. So this now we're getting into the end of the day on Friday. So some of this ranging action here is not terribly surprising, but it's just as readable down here, right? Where's the momentum? What's happening? Where's the volume? Now, what I miss is that intra-candle analysis, right? I can't see intra-candle here, but I can, plenty of people trade very successfully without a footprint chart. It's not a requirement, but this can be really useful. It's giving you a peek at the intra-candle battle between bulls and bears, the aggressors and passive traders. Who's the aggressor, right? Where are they? I mean, who's aggressive here? Not too hard to tell. All right, so just like all of our indicators, this is fully. You can trial this get a week, but we do it for 7 days, so you're sure to get 5 trading days. Throw it up on your chart, see what you think. Right? We think it's a real value add, and it's very reasonably priced. So this is something anyone could add into their arsenal. Trial it. See if you don't get some benefit. I much prefer it to cumulative delta, having traded with it now for some time. I think you'll find this will be a preference. And then if you have a footprint chart, again, just makes it easier to get a look at what's happening. All right, guys, there you go. Give it a whirl. I think you'll find it useful. And I'll call that a wrap, and we'll be back on the next one.